So today we're going to look at financial strategy. So under this topic, most of the things we've covered them in the previous topics. You will see that it will be recurring, but we will not have to go through them once again. So you refer to them for the ones that need reference for more understanding, but it's not something that is complicated. So under this chapter, we look at mainly the functions of finance and how it is evolving with the introduction of internet or Internet of Things in the organizations. So of course, from the chapter where I looked at Internet of Things, big data, how things have evolved, how now we're using more cloud instead of using the initial way we used to do record keeping. In previous times, we'd have a team of finance department. Basically, there would be data entry, collecting data, making sure that the ledgers are well prepared, double entries are correct, things are matching, so that by the end of the month, the statements can be able to be correct. But now, with the introduction of softwares, things have evolved and changed. Now we don't have to check for the double entry, because remember, system automatically knows where to post the double entry. So now we have more time to ourselves as the finance department, and we can be able to do lots of work. So that's how finance has changed over time with the introduction of internet. And it's now a good thing, because now we focus now on doing more important things that benefit the organization. So let's look at the impacts of IT on the finance functions. So one of them is with cloud computing. With cloud computing, remember now here we are having different things coming in place. Softwares, we have Gmails, we have different softwares that have been developed and introduced into companies to use on a day-to-day basis. So the biggest benefit that we get is that now when we are using now the internet, we don't have much time to waste on doing a different transactions, bookkeeping, realigning, rechecking. So now one person can put in the information, or even the different departments can put in information in the system. Let's say like the sales department, if they make a sale, they punch in the sale. This will make sure that on your end you can be able to see the transactions, then you can be able to analyze. So it has enabled proper analysis of work because of the cloud computing. So that is in a way very advantageous, because like I said, we have real-time access to information. We can check information on time. We can be able to make decisions there and then, because it's readily accessible. And then we also have unlimited storage space in organizations. Imagine you're going to keep files or boxes of documents for the previous 5 years. It means that in a few months you need to look for a different warehouse for those books and stationery. But now when we have a software in place, we can store as much information as we can, and it's not very bulky, or it's not very expensive for the organization. It has also enabled us as companies to have information backed up. Previously, if we're using maybe imagine you're making sales by sales orders, you're doing delivery notes, all that is physical information, physical papers. And then by mistake, these books get misplaced, or maybe someone has stolen the book. You don't have anywhere else you've backed up the information, so it's extremely dangerous. But now with cloud, with having cloud in place, cloud technology, we can be able to save our information for as many years as we can. So we can continuously assess what happened in the past, what can we do best, how can we plan for the future. So it's really helpful and good for the finance department and an organization. And we also have low costs that will incur in terms of having different hardwares in place, different stationaries, different manual things that we're using before. So now here the costs are much lesser. So it's extremely beneficial to have cloud technology in place, and it has helped organizations to be able to have different checks in place. Then the other importance that we have is artificial intelligence, machine learning, and robotic. So these we had looked at them before. If you didn't capture them well, you can still check the videos again for your better analysis. But artificial intelligence has a big impact, or has a big advantage that it has brought to the finance department and management of different tasks. So how has it helped us? One, we've had routine reportings that have been improved. Before, remember, we would do reports at the end of the month, and it would be extremely hectic. So how do we benefit now? We're able to generate reports at any time, because if we are feeding in information, remember, a salesperson will key in a sale, for example, it knows what to debit. Maybe credit the inventory, debit maybe the sales revenue, debit the cash in case the customer has paid, credit the revenue. So different transactions are being captured at different times, at the same time when the sale has been captured by the salesperson. So it means at the end of the day, you can be able to extract a report, whichever report you'd want to see. Is it the sales report? Is it the revenue report? Is it the profit report, sales margin? You can check at any time. So it's much easier for the finance department to constantly or routinely develop these different reports and use them for different purposes. It also helps us with transaction posting. So in the previous times, most of the postings would be done by the finance department team. Maybe we have someone, that the data clerk, who collects these different documents, begins to punch them in the system. Then someone is going to review, someone is going to check. So they're different. It would be tedious work, and as a result of that, would have a group of people who are going to do that work. But how has it changed over time, or how has it changed with the use of technology in place? These things have been automated now, so we don't have to prepare journals. We don't have to do manually for every transaction that has been captured or that has happened in an organization. If one person has punched in, let's say, a sales, it knows which journals should be captured. The system can automatically create those different journals. So for you, at the end of the day, you'll check which journals are there, and you can be able to approve at once, or maybe prove instantly as they've been developed, and then you can upload, or whichever system that you're using. So then you can download and then be able to present your work, or even check. So it's much helpful now, or it's less tedious, because now we don't have to do one thing at a time. Different other things like journals, invoicing, capturing cash transactions, bank statements, posting, all that has been improved with the use of technology and internet. Then it also helps us in audit. It has helped in audit work. Imagine when people were doing audit before they had internet, and they're going to collect a sample. You're given a box of sales, one full box full of sales transactions, sometimes even more, depending on how the company really does business. And then you want to do sampling. It would be very hard to check what are the biggest sales invoices, which ones have the very small amounts, which one. But now it's much easier for you to collect your samples. You can just run a test, and it makes the accountants work much faster. And it also helps us in producing analysis. doing analysis is one of the biggest things that we need to do, or that we do on a daily basis as accountants or as finance personnel. Why? Because without analyzing data, without checking how what you're getting, what you're achieving as a company, then it means it's difficult for you to be able to plan for the future. But when you do data analysis, you're able to see which targets have you achieved, which things are you doing well, which things are not moving as planned. It's much easier to access that data with the internet and then be able to do analysis on time and be able to draft reports as well. So as we can say, internet has done more well, or it has done us more good as the finance department. Then we also have something called blockchain. I don't know if we understand what blockchains are. It has helped us in blockchain and distributed ledger technology in a way. Okay, now look at it in this way. If we are 5 people in an organization, or even more, and we all have access to seeing maybe these reports, we can say, let's use an example of sales reports or a financial statement report. Each person can be able to check at the same time from their different devices, or even check and approve if you're required to do the approving. Imagine it's a process that needs approval of different categories, maybe the sales head, maybe the finance manager, maybe the marketing manager, all have to maybe approve before a certain transaction happens. So they can all log in their different systems, they can access the work, and then they can do the approval at the same time. So that's how blockchain works. It helps us to view different ledgers or different transactions on multiple computers, so we don't have to wait for one person, sit on the computer, approve, notify that the second person to also log on, then they log in, do the transaction approval, then they log out, another person gets to log on. So that would be extremely tedious. But now with blockchain in place, it becomes much easier for everyone to just check in a few minutes, approve, continue with the rest of the work. Or if you want to generate different reports, you don't have to call the finance manager who is on leave to check what reports should be for the day. You can just log in, extract the report, discuss it and see if it is okay, or make the decisions you'd want to make, and you're done. So that's the beauty of technology, or having technology in place for the organization. Then technology has also helped us in improvements and innovations in softwares. Softwares have been improved over time, and at the end of the day, we've been able to get at least something we would call accurate softwares in place that we can be able to use. And this in a way has helped us to increase our speed, our efficiency as the finance department. It has helped us in preparing forecast reports. You can be able to see based on your previous, let's say if you have in the past 3 years you've been selling this product more in this particular period, then you can be able to say we can push our muscle to this particular figure. So you're forecasting. So it's much easier, which was more difficult in the time when we had manual input of information. Then it has also helped us in mobile technology, where we have mobile devices that accountants can use to access different data, or even connect with different clients using maybe different apps, so that we can be able to make decisions faster, we can be able to reach the customer instantly, advise instantly, and have customer satisfaction as a result. So it's much easier, and because of these different apps that we can use, it helps us in increasing or even expanding the brand reach to different clients. So that is it about the importances of finance in technology in the finance and strategy. I don't know if we are together, or Are there any questions before we can proceed? Okay, since no one has spoken up, I would want to presume that there are no questions, so we can be able to proceed. So now we can look at the changing role of the finance function. How the importance of finance has changed over time. How has it evolved? This is what we look at under the changing role of the finance function. So before, we had a traditional role. Here we would do doing manual ledgers, doing bookkeeping. Okay, in short, on a day-to-day basis, the finance department was solely responsible for doing the bookkeeping. But now, finance department, can be able to do different other works other than doing bookkeeping, because now they have more time to themselves. Imagine if the person making a sale has captured the sale, person making the payment, the system has captured the transaction, so you have minimal work that is regarding to bookkeeping. So now you're doing more of analysis. So it means that now the finance members or the finance team has moved away from now doing the traditional book or doing the initial bookkeeping, and now doing more of advisory. Now we can do analyzing of the work that we have done. We can do planning. We can try to advise on maybe controls and other controls that can be put in place. We can plan for the future. So these are different things that will help in having a better performance for an organization, because our work has now evolved. We're not going to employ 10 people just to come and capture different transactions that are happening in an organization. Now we can do much more better than that as the finance department. Then also we've had a change in something we call early adopters. So the finance functions were before, they were called, they were early adopters. So initially, if we had a computerized accounting system that is being introduced, would have to get the system, and then would input different data that we have had from maybe the records that we've recorded previously. But now, but now we can now have a lot of other things that we can focus on. Imagine before, if you are having a journal that you have to record a sale, or we can say a payment has come through from this particular customer, so you have to go look for that customer's ledger, maybe credit the receivable, debit the cash, go to the bank, different transactions that you'd have to, different entries, like double entries would be quite many to check by the finance manager. But now, like I said, it's much easier. We're not going to be doing only the inputting of that same routine work on a day-to-day basis. Now the system can be able to do the reconciliation, it can be able to post different journals. So we know that at the end of the day, we'll just come, extract the trial balance, and now our worry will not be that the trial balance has not balanced, because all our journals are automated and they are presumably very correct. So if there are errors, they will be very minimal compared to how it was in the previous times, whereby you're not sure if this junior person knows the double entry. Is the trial balance really, why is the trial balance having a significant difference? And then you go back to check the different journals that have come through, which accounts have been affected. sorry. So if as the organizations have adopted more of using technology, we have more more use of other team members that are in the company. Now it's not going to be only the role of the finance person to input all the data, all the data information into the system. Any other person that is having an interface with the system can be able to do that work. If you're a salesperson, you can input the sales. If you are maybe a procurement person, you can put in your order in the system. Once it is approved, it will capture the cash that has been given out, and then the person can be able to reconcile anytime that maybe finished doing their work, or maybe their purchases or sales. So it's now the work is not going to be only adopted by the finance team. Any other person in the organization that has access to the system can be able to now put in the information as well into the system. So now we have a change in routine by the finance members. So this has made it more user friendly in terms of reporting, in terms of analyzing and the managing of different accounts. Then we have number crunchers that are non-existent anymore. The the finance team function has changed, of course, over the years. Previously, we're having finance department would be looked at as a number crunchers. They had to be extremely many to be able to do. Okay, even the output would not be quite much, but we had to be many to manage all that information. But now, if we are having systems in place, it means that now we can have a smaller team which can still be able to have a full capacity of doing work that was done by the different number of members in the department before. If before there were 10, one person is responsible for collecting the documents, another person is responsible for arranging them, another person is for punching in the data, another person is for reviewing the ledgers and checking the ledgers if they've been well done. Another person is for compiling the work and preparing the statements. So you see, it had to be a big number of members coming together to have this work done. But now, when you have technology in place, we can use 2-3 people. One finance manager, maybe a receivables, and maybe another person for capturing maybe the payables. Or sometimes you can even have one person or two in the finance department, and they can still be able to participate or do the work to the full potential of the company requirements. So it has made a transformation which is extremely significant in the organization, because this helps in saving the payments that would go in terms of salaries to the different team members, facilitations. Look at things like maybe if we're facilitating them in terms of meals, in terms of maybe transportation, all those costs can now be cut down, and with the help of technology, the organization can be able to reallocate now, or even improve staff salaries, and focus on now more important things other than data entry. Then we have a driving change and achieving operational excellence. So one of the biggest advantages for the finance function is it being able to raise the strategic profile of an organization. So how do we do this? We do this by doing analyzing of the information, having finance professionals giving real-time business information, providing this information timely to the decision maker so they can be able to make decisions on time, or as and when the decisions should be made. This is much helpful in terms of minimizing delays which would come as a result of lack of information availability. If your target, for example, if you're an organization and your aim is to increase sales for a particular period, you don't know how much you've performed from the start of the month, and you're still going around every meeting saying our aim is to increase sales. It's very difficult for you to be able to make any decisions that can aid in improving or making a turnaround for your team. But now, when you have this information available, it means you can be able to see from 1st to 5th we've made sales of this much. Our target was this much. So it means we've achieved, let's say, 5 or 10%. How can we be able to ensure that we achieve the 90% in the remaining period? And then you can brainstorm as management. Maybe we shall do this, we shall improve on this, timely deliveries, maybe customer follow-ups, all that. But if you don't have information available, it's very difficult for you to be able to make informed decisions that can help you uh, achieve what you're trying to push forward for as an organization. So having technology in place has helped in driving the change, this particular change for the organizations, and at the end of the day we've been able to have excellent operational results, hence growth in the organization. Then it also helped in assisting data-led strategic decision making, because now we know what we are dealing with. We can be able to make decisions instantly, or be able to continuously check what we had decided on and what we can improve. Then it has also helped us in increasing speed and greater collaboration. Like we said, now this time we can be able to access reports anytime, or at least we can be able to get a rough estimate. Even if the person for making sales didn't punch in today, at least we can be able to notice that from yesterday, or maybe from the last 1 week, this is what we have made, and we presume that in total we have maybe made this particular amount of, let's say, sales, or maybe we've done this amount, we've had this number of expenses. So that helps you to be able to make to be able to now reduce the time that you would have taken when you're doing manual collection of this information. Also, it helps you in speeding reporting. If you've been reporting, for example, imagine before if you've done all that, let's say all the transactions for today will be captured tomorrow by the different person. That files keep moving from one desk to another, So it means if, for example, we're supposed to close the month on every first of the next month, but these documents are still quite many. They're being captured, or there's been a delay. Maybe one member fell sick, they did not work, so we have a backlog. So there will be a lot of delays in terms of preparing financial statements. But now, when every other person is involved and they can be able to access the system, patch in the information, have approvals, have data collected, extract reports on time, so it means that we can be able to speed up our work and be able to have these reports prepared by the deadline that has been given, and as a result we increase the speed of our team. So that is really quite helpful, because now there will be lesser delays and we shall be able to achieve most of our targets in terms of report preparation. Then if we look at also big data, every organization, as it grows, information keeps growing along. If there are more expenses, if you're maybe doing construction, assuming a construction company, you're purchasing if you're constructing one house per month, and now you have 5 different sites that you're looking at, it means that now your purchases will be much different, expenses will be much different. Things will keep growing as the business grows in terms of data availability. So If you have technology in place, it's much easier to have this data clustered, categorized, and also much easier to analyze, because it has been now, um, it's not coming as a whole big chunk. It's now being classified into different categories, maybe expenses alone, sales alone, we have maybe cash collections alone, we have debtors alone, creditors alone. So this helps in having timely analysis, and as a result, we are doing it's of much value for the organization to be able to analyze big data, be able to make decisions as well with this big information which is available to them. Or we can also have much data being captured than previously when we're having the traditional way of doing finance. Then we have the circle of accountability that has come up as a result of AI. This is mainly about the risks. So as accountants or as finance professionals, we need to be active to ensure that these risks are managed and mitigated to an acceptable level. Because at the end of the day, that is one of the biggest roles for every other person that is in the organization. We don't want to be in a loss-making entity. So what has AI helped in bringing to the table? We've had strategic visions. So we can be able to align different capabilities to the organizational strategies that are being developed. So we know what the vision is, and we can be able to align it when we are trying to make a strategy for the company. Then we have people, processes, and culture. So here the technology helps us in having in an organization, we can be able to cut across different people with different processes. So we can be able to align along with the different people, different cultures. If we have this particular goal, it's meant for this particular individual, that's supposed to be done in this particular way. So it's much easier to have it shared across in the organization. And then we have also risk and compliance. So we're trying to ensure that the risk professionals are collaborating with the technology teams to govern the artificial intelligence. So as a result, we can be able to see which risks are arising, how we can be able to manage them, how we can bring them down to an acceptable level, or we can be able to decide if either to take it on, either avoid this particular risk, or bring it or transfer it even, depending. So you can constantly be able to check the risks that you have and be able to see how you will deal with them. Then we also have the investment financing. Sorry about that. So with the investment financing, we have with investment is something that is not, we are not sure of the final output that is coming from different investments. So as we're developing a portfolio for an organization, if we have AI in place, it helps us to be able to see which how much can we have financial flexibility in place. How much can we be able to invest in this particular project? How much more can we invest in a different project to be able to earn maybe double the returns or a particular number of returns? So we're able to assess, we're able to check, or able to even leave alone the internal. We can now check also the external, because we have this information that is very much readily available on the different platforms. We can check if we've been investing, let's say in real estate, can we invest in something else? Can we do capital markets? Can we do different things? So it helps you in checking the different options that you can invest in, and we can be able to make a decision on what to go with. And then lastly, we have data governance in our circle. And now here, for real.